Hi there, welcome back to another episode. I'm John Bowens in the virtual classroom, and in this episode, we're going to be talking about the 3 things that investors wish they would have known prior to opening their self-directed IRA. In other words, the 3 lessons that a lot of investors unfortunately have had to learn the hard way. And so we want to help prevent you from falling into these same traps. So let's get started here. As always, in this program, we answer one of our viewers' questions at the very end. So make sure that you drop your questions in the comments section below. Our first lesson learned is not having the account funded well in advance of making an investment or identifying alternative investment opportunities. Keep in mind that alternative investment opportunities come and go very quickly, whether it's real estate partnerships, private equity, private credit, investing through a crowdfunding platform, possibly even investing in digital assets like cryptocurrency or physical assets like gold and silver. The time sensitivity of these alternative investments can be critical to an investor. And all too often do I see investors fail to follow the 3-step process. Step 1 is opening and funding the self-directed IRA. Then step 2 is identifying and directing the investment. And then step 3, of course, is managing and harvesting the investment returns. So opening and funding the account well in advance is very, very critical. And all too often do I find investors first try to find the investment, then they attempt to open and fund the account. But the problem is by the time they find the investment and then they open and fund the account, it might be too late. Keep in mind that transferring money or rolling over money from another retirement plan into an equity trust IRA is not an overnight process. You, along with equity trusts, are at the mercy of your current IRA custodian or 401k provider or 403b provider or other retirement account provider. And don't be surprised when you call your current IRA or 401k provider when they tell you that it can be multiple days to potentially multiple weeks to transfer or roll over your money into an equity trust self-directed IRA. IRAs, generally, you can transfer money in about 5 to 8 business days, depending on the financial institution you currently work with. 401ks, 403bs, thrift savings plans, those could potentially take a little bit longer. Could be 2 to 3 weeks, could even potentially be upwards of 4 weeks, depending on your specific situation. So the lesson learned here for a lot of investors is to have the funding secured in their self-directed IRA well in advance of identifying investment opportunities. So how do you open up a self-directed IRA? Very simple to do that. You can reach out to Equity Trust directly, and a self-directed IRA counselor can take you through the process of establishing and funding your self-directed IRA. All right, let's jump into the second lesson learned, which sort of goes along with the first one, and that is timing up the markets. If you're invested currently in stocks, mutual funds, ETFs, bond funds, maybe you have a portfolio of both stock market and fixed income securities, whatever your situation might be, you need to keep in mind that if there's some sort of short-term or even long-term turbulence in the public markets, you could potentially suffer a loss in your retirement portfolio and then put yourself in a situation where you may not be able to justify selling those positions and moving over your cash into your equity trust self-directed IRA for an intended alternative investment. So for example, you see on your screen here, there was an article at the very end of 2022 by CNBC, and it says, stocks fall to end Wall Street's worst year since 2008. S&P 500 finishes 2022 down nearly 20%. So could you imagine if you started with a $100,000 portfolio, took a 20% loss, therefore a $20,000 loss, and now you only have $80,000? Well, what if you needed to deploy that $100,000 into an alternative investment transaction, but now you only have $80,000? So you're either going to have to A, wait for a recovery, right? Wait for those positions to recover and then sell, but by then it might be too late. Or B, you in that instance might have to look for a different alternative investment strategy or different alternative investment that you want to make with that account. So I have seen over the years through multiple market cycles, I've seen hundreds of investors miss out on opportunities because of some sort of unforeseen or even in some cases foreseen turbulence in the markets, and that investor was not quick enough to sell their current positions. Now, all that being said, keep in mind that equity trusts were a directed custodian. We can't advise or tell you to sell your stock positions or mutual fund or ETF positions. You ultimately need to make that determination on your own or even team up with your financial advisor to make that determination on when you want to sell those positions. And yes, you do have to move cash over in order to prepare for an alternative investment transaction. I've had some folks that will ask me, well, John, can I just move over the stocks and mutual funds into the equity trust account? You actually could do that. However, you'll have to at some point or another put that into cash in order for that cash to then be deployed for an alternative investment transaction, whether that's real estate, private equity, private notes, private debt, investing in a fund, cryptocurrency, gold and silver, whatever it is that you might want to invest in from an alternative investment perspective. All right, that leads us to number 3, lesson number 3, which is the ability to hold both traditional and non-traditional investments in your equity trust self-directed IRA or other retirement account. So a lot of investors are not aware of the fact that they have access to a mutual fund trading platform through their equity trust account. And then if they choose to, they can open up a brokerage account through an affiliate ETC brokerage service, which allows you as an equity trust client to be able to trade both traditional investments like stocks, mutual funds, ETFs, along with holding alternative investments in your account. So in other words, you can sort of hold all types of investments, traditional and non-traditional, all under one roof, all under one account. I hope you enjoyed this segment on the 3 lessons learned. Remember, you have to make sure your account is funded well in advance of making investments. Keep an eye on market turbulence in the public markets if you're currently holding public assets. And then number 3, of course, is making sure that you know that you have the ability to hold both traditional and non-traditional investments. All right, that leads us to our question of the day, which is from Christopher. Christopher is an equity trust client, and he says, John, I have both traditional and a Roth IRA with equity trust. How do I set up a Roth conversion for a portion of cash I have currently in the traditional account and move it over to the Roth account? Can it go directly to my current Roth account? Great question, Christopher. What Christopher is referring to is a Roth conversion. So that's where you take traditional IRA money, tax-deferred money, in other words, money that hasn't been taxed yet, and you convert it over into a Roth IRA. And when you convert that money over into a Roth IRA, you of course have to pay taxes. So whatever amount you convert from the traditional to the Roth, you add that to your 1040, you add that to your ordinary income, and then you pay taxes accordingly. So this is certainly a subject for you to speak to your CPA or your tax preparer about to make sure that this is something that is advantageous for you. So you convert the money from the traditional to the Roth. Question comes up often, do I have to convert all of it or can I convert just a portion of it? And you can absolutely just convert a portion of it from your traditional to your Roth. Some folks will actually do this because they want to what they call convert in stages. So they'll convert multiple times throughout multiple years in order to spread their tax burden out over multiple years. Now, to get to Christopher's question, what he's asking is, do I have to set up a separate Roth IRA? I already have a traditional and Roth with equity trust. Do I have to open a separate Roth? You don't have to do that, Christopher. All you have to do is fill out a form called a Roth conversion form, submit that to Equity Trust, and you tell us the amount that you want converted from your traditional to your Roth, and then we'll go ahead and process that accordingly. There will be some tax reporting done there to report that amount that's converted, and you're going to be responsible for reporting that on your own tax return. Also know that you can convert an asset in kind. So if you have property, notes, private equity, private credit, gold and silver, cryptocurrency, whatever you might have. Now that does require a fair market valuation. So for some assets, you'll have to submit a fair market valuation form to update the valuation. But those are items, of course, that our customer support team here at Equity Trust can help you with and help you through the process. So Christopher, great question. The answer to your question again is you don't have to open up a separate account. You already have a traditional and Roth, so you can simply convert money from your existing traditional into your existing Roth with Equity Trust. If you have questions about that, or anyone else on today's program has questions about that, feel free to reach out to us here at Equity Trust, and we will help you through that process. Last but not least, if you're somebody that doesn't have an Equity Trust account and you'd like to establish a self-directed IRA to make sure that you're set up for success going forward, you can schedule a one-on-one consultation with one of our self-directed IRA counselors. Check out the show notes below. In the comments, you'll see information on how to sign up for a one-on-one IRA consultation. I hope you enjoyed today's episode. As always, as I always close with, keep leveraging compounding interest in the absence of taxation. Thank you.